What's happening? What's happening? What's happening? Y'all see I'm ready with my screen today. Let me pin this comment real quick. Let me pin this go to YouTube comment real quick and then we'll get in it, man. What's happening? What's happening? What's going on, man? Who up in here already? Mendez, what's up with you, Mendez? Pulling up early. Mendez, when I was getting ready to log in, it said one was waiting. I said, who waiting already? Who that is? I see it's Mendez. What's up? Here to learn and share up in here. What's happening, Kevin James? Good morning. Good morning. Oh, I forgot to sing to y'all today. Good morning. As we slip the night. What's going on, man? Hey, let's get the pleasantries out of the way so we go ahead and get into it. It's 9 o'clock. It's time to talk about this overnight price action. Hopefully, I don't get too distracted today and start talking about other stuff. But for anybody tuning into the replay, what's up, Pamela? Anybody tuning into the replay who don't know who I am? My name is Timothy Lee Rogers Sr. I go live on Al Gore's internet every day at 9 a.m. Eastern Time and 6:30 p.m. Eastern Time and talk about the price action. In the morning, we talk about the overnight price action. We look at a few levels that we interested in maybe taking some trades off of, share thoughts that come into this little squirrel mind of mine, anything that's, I just want to share with the cousins pertaining to trading and pertaining to the stock market because I decided to try to show people what traders do, what full-time traders do. What is a trader? What's a full-time trader? I don't know what that is. I hear people say that all the time. But I started doing Tim's Tidbit, just sharing my knowledge that I've picked up over, the last couple years from some very phenomenal people and some stuff for free. And I decided to just share mine for free because every class that I ever taken, I've never had somebody just do it with me every day. Just show me what they gonna do every day. It's cool to look at what you did in the past, but I'm the kind of person that I'm visual. I need to see it happening right now. So I just try to share what's going on right now. If that's something that you're interested in, please hit the like button. Please hit the share button. It's gonna be it might be on this side of your screen, might be on this side of your screen. It might be right there in the middle, like how it is on my son's iPad. Hit the like button and then hit the share button and share it with a cousin. That's all I ask. I don't ask for no money. You ain't gotta pay me. All this for the free 99. Just click the like button so that YouTube will show it to other cousins and then share it with a cousin. Share it with one cousin you like and share it with one cousin you don't like. Click right there on the screen. Let's get into it, man. Let's get into it. We're going to get right into it today. I ain't going to hold you. I'm a little sleepy, but we here. Oh yeah, merch. Go buy some merch if you want to support me on the money tip. Go buy some merch. TheNewTLR.com. All the links are in the description. All the links in this. Let me show you where the links at. If you want to get to my links, let's go right here. Come on, click in there. Why is it not clicking? Stop jumping up. Click in there. Get out of here, ad. Get out of here, ad. Right there. It sounds funny hearing myself. There go all the links right there. Oh, yeah. We running a 2-week trial for scheduling a one-on-one. If somebody get on my nerve or if don't nobody book a one-on-one, I'm taking the schedule down. But we run a 2-week trial to see if somebody book. But you don't have to book a one-on-one. This is your free one-on-one right here. At the end, I'm going to put the link in the chat so you can pull up. Matter of fact, I'm putting the link in the chat right now. Boom, the link is in the chat. I just put the link in the chat. That link right there, that's the link to pull up if you want to talk to me, if you want to ask me a question. This is your free one-on-one right here. There go the Spider Gang merch right there. Spider Gang merch. Oh, shout out PDub. I got PDub link down in there. PDub got some 5 free content. PDub link right there. PDub link gonna be in all my videos. Spider Gang merch in all my videos. The one-on-one links until y'all. I even got a affiliate link down here for Jay the Trader course, right? So there go the links right there, man. The newTLI.com. Get some merch. Who reporting today? We ain't got nothing on the economic calendar today, I don't think. I don't think we had nothing. I think we had new home sales, housing start permits. For anybody that's tapping in and don't understand how to use Econo Day or Forex Factory, that's where I like to come and look at the economic data that's coming out for that week, that day. You know what I'm saying? And it, like when you come to econoday.com, all you do is you click on view full calendar, boom, it lay it out for you a week at a time. That's all it give you on the free version. I don't know what paid version look like. I ain't paying for nothing. It's for the free 99. Like I said, the free 99. When you come to the page, you see how this says report. And over here at existing home sales tomorrow, it says consensus. Before the event happens, it says consensus. If you click on the consensus, that shows you what they're expecting to happen at that event. Once that event happens, it says report. That's when it gives you the actual number. It shows you what the consensus was versus the actual number. If it's a red dot, that can potentially be a market moving event. If it's a green dot, it probably won't move the market. You know what I'm saying? So you come in here, you can see what the consensus was. The consensus was 1.58. The consensus range was 1.51 through 1.65. It came in under the consensus, but within the consensus range. And then the permits actually exceeded the consensus just slightly and came within the consensus range. So they was expecting it. They was expecting it to rebound and go to 1.58 because last time it was down. It's saying that last time it was down, and they was expecting it to come up to at least 1.58. It came in at 1.55 inside the consensus range. So what this is like when people commit to buying a house, and when they commit to building a house. I mean, when they commit to like getting permits to build it, and then I think this one here is when they starting it, right? And it you can go in and read what the definition is, right? Housing starts are registered at the start of construction of a new building intended primarily as a residential building. Yeah. So that's the starts. That's the starts is when they start the construction, and the permits is when they getting permits to start new constructions later on down the line, right? So and then you can look at why investors care and all of that right there for anything you're looking at. So the housing market, it kind of showed on the economic side, like when the housing market going down, it's an indicator that they look at where like, oh, the market either struggling or it's not struggling, and the way they get a feel for is how much the builders are building, how many starts they doing, how many permits they getting for future builds. They can see how strong the construction side of it is, because if the construction side is strong, then they know they're going to start buying appliances, and they know people going to buy them houses, and if they buy appliances, that's going to be helping, you know what I'm saying, like stuff like Home Depot and Lowe's and all that, because it's the lumber and the appliances and the this and the that, and the people, if they building houses, that means people want to buy houses, and it's a stimulating the economy and all of that right there. So that's why, you know what I'm saying, it can potentially move the market, because it, you know, it's something that affects the overall GDP, I guess. I don't know. I'm having a brain cramp. So, but that's about all the news we had today. Ain't nothing really popping off for real. For real, until we get job numbers on Thursday and PMI on Friday. That's the only real stuff. The rest of it is like existing home sales. It's potentially moving, but they already getting a feel for what the stock market doing. Let's pull up Spalene before we get into the ES, man. Spalene, where you at, baby? Here I go. There goes Spalene. Spalene about to gap up again, y'all. Let's see what we do today. Are we going to gap and go, or are we going to gap and retrace again and consolidate and stay in the middle of the road? Although we still in the middle, 100. Always coming here with the slight flex. Always coming here with a slight flex. What's going on? I ain't saying what's up to everybody, man. What's up? What's up, T. Baker? What's up, Michelle Tucker? Oh, what's up, Otis? Otis 2.0. And matter of fact, what's up, Kevin? What's up, Sonya? What's up, Trey? Who else in here? 100, of course, flexing. What's up, Rhonda Green? What's up, Rhonda Green? Y'all like how I roll that R? Johnson & Johnson, Netflix, Halliburton, Lockheed Martin, Ally, JB Hunt. I think JB Hunt in the afternoon, I think. Let's see what's going on. Is Netflix in the morning or the afternoon? Netflix, let's look at earnings real quick, man. Who already reported? Who already reported in the morning? Before market, Johnson & Johnson. They beat on the top and the bottom, guidance down. Did the guidance down hurt Johnson & Johnson? They beat on earnings. They beat on the top and bottom. The guidance is down. Hey, what does this mean under the guidance when it's like a little like loopity? What does that mean? I know the red arrow down mean guidance was down, but what does this loopity mean? Do anybody know what that loopity mean? Halliburton beat, don't care. Lockheed Martin beat on the top. Didn't beat on the bottom. They beat on earnings, didn't beat on revenue, missed on revenue. Ally, don't care really. Who else in here? I don't see nobody else that I really care about that reported this morning. Besides Johnson & Johnson. Johnson & Johnson beat and they guided lower. Somebody tell me if that affected them. JB Hunt, that's transportation stuff. That's important. Supply chain stuff. Let's see how when the transports, all that start doing good, the transports and stuff like that start doing good before the other stuff that the transport effect start doing good. I picked up them kind of gems from Charles Coney. If y'all don't know Uncle Charles, y'all need to tap into his story, man. Like, by the time we see the effect of the transports doing good, the transports, it's too late to get in on them because they start doing better because of the demand that let's just say, what's a company? I don't know. I'm just gonna pick a company, Caterpillar. Let's say Caterpillar, you know what I'm saying? Boeing. Let's say Boeing. Boeing, like Delta, just ordered like 100 planes from Boeing the other day. Let me come on full screen for this. I'm on one today. We talk about price action every day. Let's talk about mindset on stuff, how you think about stuff. I'm primarily a swing trader. All the day trading stuff be fun, but let's talk about mindset of investing and trading for a minute. Boeing, Delta just ordered like 100 planes from Boeing's, right? And they got like the contract to get like an option to buy 30 more, right? They spending like a few billion. They spent a few billion getting these planes, right? So now, boom, Boeing, they got to get all these material to their facilities to build these things. So, boom, Boeing got the contract to sell these planes, right? Boeing got to get all these materials to their facility. Boeing go out and say, hey, JB Hunt, they ain't said this. I'm just saying this is how it go. JB Hunt in the transport arena. Hey, JB Hunt, we need you to bring us our stuff over here. JB Hunt, they got the contract to bring it, right? You don't know, by the time it get all the way to Delta, JB Hunt had to get it to Boeing. Boeing had to make it. And then once Boeing make it, then Boeing gave the Delta. By the time we fit, oh man, Delta just got 100 planes. Yeah, Delta got 100 planes today. You see what I'm saying? But JB Hunt had to bring the material 2 years ago. You see what I'm saying? But like that's kind of stuff I be picking up gems from Charles Coney when he be like, you know what I'm saying, when he be dropping gems on company. And I be like, man, what does this company do? Oh, this company deliver material for that company. But they pick it up from this company over here. So this company over here make the material that this company pick the material up to take it to this company over here. That's kind of stuff. Them the kind of gems I be picking up from Charles Coney. I just want to drop that off right here for y'all real quick, man. But y'all ain't came in here to hear me run my mouth, man. Y'all came and hear me talk to Spotleen, where you at, baby? You about to gap up. Spotleen about to gap up again. Y'all already know what I wanted Spotleen to do. We came close to it yesterday. I wanted Spotleen yesterday when we gapped up. You know what I'm saying? I said, I really wish we would have gapped down and came and got this gap up right here and took off. We gapped up, came out, we came real close to it. We came down and kissed that booger. We came down and kissed that booger, and then we pushed back. Then we pushed back up just a little bit, and we ended up in the middle of the road. Although we still in the middle of the road. For anybody that's tapping in and don't know why I'm talking about the middle of the road, we right in the middle of the road right here. See this little blue rectangle I drew? I drew that blue rectangle because we had a break in market structure to the downside when we broke the low on May 20th, which was 380.54, and then we had a break in market structure to the upside where we broke the high of June. That's May of June 15th, which was 383.90. So right there, we got a market structure break to the downside, market structure break to the upside. And ever since then, we just been fighting over this territory right here. We've been right here. And so we're accumulating a lot of longs or shorts. We won't know which one we accumulate until that, let me coil it. We've been coiling. How long we been coiling? Let's count the days while we coiling. We're going to start from right here. After this green candle, we starting on this one right here. How many days we been coiling? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I done lost count. But when it come out, when it come loose, it's going to go. Whichever way it go, it's going to pop out. It's going to pop out. Will it pop up? Will it pop down? I don't know. I don't own a crystal ball. But we still in the middle of the road. We just been, this right here, this is what I like to call nice, tight consolidation. You see how we stayed in the middle of the road right here? We were just like up, down, right in the same nice little neat range. Oh, excuse me. I ain't making that in them burping. Nice little neat range right up in here. You know what I'm saying? Little neat, nice little neat range we stayed in here. When we come over here to this middle of the road over here, look how sloppy, doppy, choppy it is. You know what I'm saying? It's like a huge range that we've been chopping in forever and a day. I'm gonna put it right here because we kind of ducked at the bottom of the range down here. We kind of disrespected the range a little bit. We trying to figure out if that disrespect gonna end up being turtle soup. So right now, we gapping up. The bulls, as of late, have been stamping. They've been putting their stamp in the game, right? Because this week here, we closed here. We opened here, closed the week here, but look at all of the down, then back up, how the bulls fought back up. If you look at that on a weekly time frame, that's got a long lower wick, right? How do wicks get made? You go in a direction and then you reverse course. That's how wicks get made. Top wicks, bottom wicks, they get made the same way. You go in a direction, then you reverse course. You go in a direction, you reverse course, right? So right now, we've started the week off. We started going down. And now, right now, it looked like we're reversing course. I really wish we would have went a little bit further down, but as bullish as the momentum was, yeah, we might just end up going up from here. I really wish we would have came down and got this gap up, but we'll see how it play out, man. We'll see how it play out, because once the bulls get above 393.16, once they get above 393.16, they will submit their they stake in the game, because that's going to give them a new weekly high. If I jump up to the weekly candle again, that's going to give them a new weekly high. That'll be above this swing high right here. That'll give us a new, once we get above 393.16, that's going to give us a new weekly high and the bulls will have cemented a higher high and a higher low on a weekly time frame, right? Submitting the fact that, hey, we came here to play. Submitting the fact that, hey, we trying to break our downtrend just like Apple has, right? Speaking of downtrends, let's show it again for all the cousins that wasn't here. I did it for the trend line traders yesterday. I went in and grabbed me a little ray gun, came here, then pointed that thing, pow, pointed that thing right there, boom. There you go, going down, right? So we came up, we gapped up, we came down and closed below it. Like we testing that trend line right there. The other day, we hit it, boom. Let's just say we closed right at it. Then we gapped up past it, closed just below it, and now today we about to gap up past it again. So we testing that trend line on Spylean right now for all my trend line traders. All my trend line traders looking right now like, hey, yeah, we testing this. Yesterday was like a back test of the trend line, and now we finna try to see what we gonna do with it. For all my trend line traders, I see you. I see you out there. I try to put something here for all the, let's look at the EMAs, right? EMA traders, we testing the 20 period EMA on the daily right now. We testing the 20 period EMA, right? So we went up, we reclaimed it, came back, tested, and now today we gapping up above it again. So right now we testing the 20 period, right? If we can claim the 20 period, I'm talking in the sense of EMA traders now. If we can, you know what I'm saying, keep this 20 period, the next target is the 50 period. You know what I'm saying? EMA traders, that's how EMA traders trade. I used to trade with EMAs. That's how they trade. That's what they look at. They got their targets. If we can take down the 20 period, we can claim it, keep it, boom. Then the next target is the 50. If you can keep the 50, boom, the next target is the 200. Right? Boom. That's just how that's how a lot of EMA traders trade. And if you look here, right now, the 50 is real close to this gap down. It done dropped down a little bit, but if it fight up, it'll start coming in line with that little gap down right there. So all eyes on the area right there on the daily. Let's look at the weekly EMAs, right? We bounced off of the 200. Tim, you supposed to be talking about overnight price action. You doing all this talking. I know. This is my live. Leave me alone. We came down. We bounced off the 200 EMA. And that's been, we just been consolidating right here. Waiting for that boing. We waiting for that boing. The Bulls really trying to cement they stake in the game right now. You know, after we bounced off the 200, we had a super bullish week, right? Took a little profit, came down, said, hey, we ain't going nowhere, kept us in the middle of the road, right? Gap down mammoth. Said, hey, we ain't going nowhere, pushed up, right? Just above the middle of the road. Gap down a little bit, sold off bad, ducked down below, broke these relative equal lows right here. Then the Bulls came back in and say, nah, boy, we still here. Pushed us back above the middle of the road. This week right here, we gapped up. Then we sold back down into the middle of the road, and now we getting ready to gap back up again. Now, if we gap back up and this ends up being the low for the week, if we gap back up and this end up being the low for the week, the Bulls are really putting their stamp in the game because they getting more and more bullish. Even though this is a red candle, that's a bullish candle. So that's you got, after you hit the 200, so far you got one truly bearish candle since we bounced off the 200. Like, it took us down to the 200, but that's a bullish candle. That's a bearish candle. That's a bullish candle. That's a bullish candle. And right now, we in the middle of making this candle for the weekly. So if this candle end up being a bullish candle, that's going to be 3-to-1 weeks going to the Bulls in this consolidation period. And if we break out and close above it this week, then the Bulls gonna be stamping their game saying, hey, we winning this consolidation battle, just like the Bears did last time on the daily level when we consolidated. All right, Tim, but what all that got to do with the price of tea in China for the overnight price action? It don't. I'm primarily a swing trader, so I'm looking at where we at in the overall scheme of things. Because if we break to the upside, and get a closure above 393.16, right? Any pullback gonna be a viable pullback for little Timmy Rogers for trying to get me a swing or something like that. If we break to the up, if we get us a closure above 393.16, any pullback gonna be a viable pullback for me. Am I jumping in headlong? No. I'm just gonna be looking at getting me some swings. I ain't gonna be super scared to hold my swings no more. That's why I'm talking about this. I'm just giving you the mind of little Timmy Rogers, man. Now let's look at the ES before I look over at the charts and see that Kev or Larry or 100 or somebody that said something slick. The price action still looking bullish. The price action still looking bullish. Let's see what we did overnight. As you can see, I haven't marked off much of anything besides yesterday's low. The overnight low is just about in line with the New York close from yesterday. So we just pretty much gonna call that the New York close and the overnight low the same price. The midnight open is 38.41. The London open is 38.42.75. We are showing no interest in going back there right now. And the reason why I say that is because just looking at where we at for like yesterday's range, just looking, I was going to put my hand up on the screen like y'all can see it. Looking at yesterday's range, I'm thinking like 50% would be somewhere around, maybe around either this fair value gap or this fair value gap. Somewhere around here, look like it's 50% of that. And so the reason why I say it don't look like we showing no interest of going there right now, I mean going back down there right now. Okay, so equilibrium is right here, just around this fair value gap. So we still got a fair value gap here. So keep in mind now, we've come up, we're in a discount right now. So we still got to be mindful that there's a fair value gap here, 15-minute fair value gap here, and we inside a 16-minute fair value gap that's in a discount for the sellers. We've just come, it's the momentum is kind of bullish right now, but we just came into a discount for the sellers. Like we came up, we touched into a discount for the sellers here inside this 15-minute fair, filling this 15-minute fair value gap rate. I don't have it marked. It's inside this 60. For anybody who can't see it, it's a fair value gap right there, right? So I did I make my wicks fat for y'all? Let me change the wicks. Sound like my son cooking eggs again. That boy, he gonna turn into an egg. All right, we got a 15-minute fair value gap right there that we came in the field. That was in the discount of yesterday's price action, yesterday's dealing range, if you will, right? And then we sold back down and we came back down to this fair value gap right here. It's a 15-minute fair value gap inside this 60-minute fair value gap that I marked out. We came back down into it, then we pushed up, because this right here gave us a breaking structure right there, 15-minute breaking structure, probably a 60-minute also, probably a 60-minute also. Yeah, 60-minute breaking structure also. Came back down close to the breaking structure into this fair value gap right here, and we pushed back up, right? So once we came back down, revisiting that breaking structure, hit that fair value gap, pushed up, we got a new breaking structure right here, and we got a new 15-minute fair value gap right there. So looking at this, we in the discount for the sellers. If this 15-minute fair value gap don't hold, right? If that fair value gap right there don't hold, meaning if it come back down, if we come back down and that fair value gap don't support it and push it up, we come back down and get a closure below this, and push back down before toward this fair value gap here, the lower the closure start getting, the more we might end up pushing down, because we're in the market just opened. We're in a discount for the sellers. Let's see if the bulls got enough to keep pushing it up. We coming real close back to that the bottom of that weekly fair value gap, and we gonna see if we gonna push to fill this 60-minute fair value gap. The only move this down. The only upside buy side that I see outside of these only liquidity to the top side that I see besides these fair value gaps is up there yesterday's high. That's the first one I see, 39.0950. That's the first one I see right there, because I don't have any other swing highs that I would mark outside of yesterday's high as far as a upside liquidity target. 39.0950 is the first upside liquidity target that I see, that I would be looking for if I was to take a long. I needed to give me something. See, this is what the market be doing. It, like for futures, it be setting up before the time frame I like to trade. I don't like to trade right at 9:30. So see how it came up here, got a break instruction, then it traded back down to that fair value gap and start pushing up. You know what I'm saying? That was the entry to be in right now. You see what I'm saying? But that came in on the 8:30 candle. That came in on the 8:30 candle. That didn't come in, you see what I'm saying, like during the time I like to trade. But let's see how that opened. 38.74.75. 38.74.75 is the New York Open. 38.74.75 is the New York Open. What's that? 33.75 points higher than the midnight open. Yeah, because the midnight open was 38.41 and the New York Open is 38.74. That's 33.75 points higher than the midnight open, and then it's 32 points higher than the London Open. So it's the London momentum has been bullish. Let's see if this bullish momentum keep up. We're pushing back down right now. We've broke this high right here. There's no high that we failed to get to, so I'm assuming that this is just coming back down to get this gap work to keep pushing, because there's no high that we failed to get close to right here. There's no good reason outside of it's just doing a retracement to sell back off. There's no good reason for it to like sell off right here, right? Outside of the fact that, hey, we were just consolidating and buying back up to get to the discount just to sell it off, right? But we very well disrespected this fair value gap right here. Once we blast back through right there with no kind of resistance. We don't have any red candle going back through this fair value gap right here. Had the gap fill, retracement, and then blast through it on this 15-minute right here. Let's see how it play out, man. So downside, if we break through this, I ain't got no line. What's that? 38.55.50. 38.55.50. If we get a closure below 38.55.50, then I will be looking for a reason to short. Yeah, if we get a closure below that right now. If we get a closure below that, I'll be looking for reasons to go short. But other than that, I'll be looking for reasons to go long today. The market don't seem like it's trying to do a whole lot right now. But like I say, if you ain't in on this price leg right now, wait for a setup, because this was the setup to get in right here. The retracement back to this fair value gap where it got a breaking structure right now. That was the spot to be in right now. Quick little trade. This would have been the place to take profit or profit target if you have multiple contracts. Shave right there at that high, because the next spot is way up here. So it's like, you know what I'm saying, like how long you want to stay in the trade if you got in down here, because there's no low hanging fruit. You know what I'm saying? You can eyeball getting back to this consolidation at this 15-minute fair value gap right there, but there's really no low hanging fruit. It's such a big move. That's just the range. That's the big range. I supposed to been going to the looking at the chat. What's happening? What's up? Who in here? What's up, Cool It? What's up, Kashaya? 39.50 look juicy. Oh, you bullish. You bullish. You way up here at my old throwback levels. I need to move this down. You way up there at my old throwback levels. Y'all see that 39.50, 75 I got up there? You up there, you at my old throwback levels. Look at you. You bullish. You bullish. I ain't mad at you. Well, I still got that on the screen. What up? What up, Robinson? Netflix after hours. Okay. Let me squeeze it. The Kramer puts. Don't know what that means, Michael. I'm lost. Spidey senses got me feeling like free fall today. Oh, you think it's gonna be a free fall? Think it's gonna be a little bull trap, take it up and then drop it like it's hot? If it does go for 39.50, it'll take out those three liquidity levels. Yeah, that's it. You bullish. You going up there. You going up there. Where I'm at. What's up, Kate? Yeah. My call swing. Oh yeah, I put the link in the chat early, man. I had put the link in the chat early. I'll put it back in there again. I'll put it back in there again for anybody that want to pull up. I had put it in there early. Let me do it one more time, just in case somebody want to pull up. Boom. I just put the link in the chat one more time if anybody want to pull up. If anybody got to go trade, I appreciate you for pulling up. Hit the like button before you dip. Hit the share button. Share it with a cousin before you dip. I pyramided the expirations up to January. Okay then. Expiration up to January. What you getting into? SPY? What you got, some SPY calls that you getting into? 38.34. Oh, you bearish on them? You bearish on them, Red? You bearish on them, Red? You looking for 38.34? Was that Red talking about the Spidey senses? Oh, no, that was Kevin talking about the Spidey senses. Red, you bearish on them? You talk about going to 38.34? You talk about coming down here? What 38.4? Oh, that's the you talk about coming back to the close yesterday? What's that 38.34 for? Also looked at 2D and 4D candles as well. I think it helps providing more clues for buyers. What in the world is a 2D and a 4D candle? Is that like 2 days? 2 days and 4 days? What's a 2D and 4D candle? Can really see chop with those candles. Was that like a 2-day and a 4-day candle? They definitely accumulating for something. 38.79 to close the 15-minute fair value gap. Oh, up here. Up there. Yeah, that's right there. Yo, yeah. When we went up there, yeah, we tapped that. I ain't marked that out. I got the 60-minute fair value gap. Yeah, we just kind of chilling right now. Hopefully it don't be like yesterday. Yesterday we just chilled and they do nothing up until 1 o'clock, and then that thing fell off a cliff. Apple said they was gonna slow down hiring people, and that thing fell off a cliff. Aren't the highs or lows for the week usually set on Tuesday? Yeah, I mean it could be. It could be. It ain't like 100%. Shout out to the homie man, what in the Quanti did a study. He basically did it for like OPEX week. I said I was gonna start saying OPEX. I think he did it for OPEX week, and it was like it was mostly on Tuesdays, but it wasn't like staggeringly over. Like it was like just say 31% on Monday, 37% on Tuesday, 30 like just say 32% on Monday, 37% on Tuesday, 30% on Wednesday. So it wasn't like 75% of the time Tuesday. You know what I'm saying? It was like mostly on Tuesday from his study that he did, but you know what I'm saying? It don't have to be on Tuesday. Right? If we stick to the script and Tuesday make the high of the week and we dump off, hey, it is what it is. But trade what you see. Biggest bear in town. Nice grab the dipper for shorter term. Cons of trading options, not futures. I guess you talk about can't get in. Yeah, can't get in. What's up, DeAndre? DeAndre, the link in the chat. Pull up. This your opportunity to get your free one-on-one. Hit the like button. Appreciate that, Kashaya. We focused on God. Yeah, stay focused. We gotta stay focused. Let's see what we doing right here. Are we coming back down to that fair value gap? Come on, Tim. Or should I say Ninja Trader? Let me get this out of the way. Are we gonna come back down to that fair value gap, or we gonna dilly-dally some more? 39.50 under 0.5 right now. What Red talking about? Oh, you talk about options. Talk about SPX. You talk about SPX. That's what we talking about. 39.50 under 0.5 right now. You talk about SPX options. Let me do this real quick. I'm just sitting up here. I ain't got nothing to do. That's why I'm just sitting on here with y'all reading comments. Man, why is it running so slow? Running mad slow. I guess because I'm streaming. I guess that's why it's running so slow. Because I'm streaming. Asking my computer to do too much. Option Station Pro. Um, what that is? That's Spylene. Let me look at SPX. SPX W.X. SPX. What's the day? Tuesday. What's the date? Oh, we got an expiration today. How we get an expiration today? Why we got an expiration today? Is this monthly expiration? Is this monthly expiration week? Why do we got an expiration today? 39.50. Why do we have today Tuesday? Why do we got an expiration today? What's going on today? Is this like what's this, the 19th? No, this ain't even. That was Apex last week. Why do we have a SPX expiration today? No, they don't have expiration every day. They have expiration like on Monday, Wednesday, and Friday. SPX have expiration on Monday, Wednesday, and Friday, unless it's like something special going on, like a Apex or what's the name? Oh, so they done start doing it daily every day for SPX? I see somebody say they introduced it 2 months ago. I see somebody say they, okay then, I guess I'm just slow. I guess I'm just slow. Appreciate that, GA. I guess I'm just slow to it. I never noticed that they was doing it every day. And I'm looking at the chain, they got it every single day. Okay then, nice to know. I never knew. In my Tony Baker voice. Oh, somebody pulled up. Somebody pulled up. What's cracking? Somebody pulled up. DeAndre.
How you doing?
What's going on, man?
Not much, not much.
Hey, all the other cousins move to the side. Y'all scoot over. I'm talking to DeAndre right now. What's cracking with you?
Not much. So I was just I've been watching the ICT membership, and I think the only thing I'm really not understanding is when it breaks this structure. When are you supposed to look for the fair value you got before or after?
When you say break, hold on. I hear me. Is that me echoing or is that you?
Um,
I hear
I don't
myself.
definitely.
Just hit the No, that yeah, you muted yourself again.
Yeah, it's probably me then.
On the do you got the YouTube still open?
No, it's only on this broadcast.
Okay, so you ain't got the YouTube open no more. Cause I was gonna say if you had the YouTube open, all you gotta do is just hit the speaker on the YouTube to turn the sound off, but don't mute your mic. But let me see. So look, let me put my screen up here. All right, so when you're looking at you talk about like how to trade like the breaking structure, fair value gap. You there? Hello. DeAndre, this is your conscience talking to you. You still there? I can't hear him. Can y'all hear? It don't say you muted. I can't hear him. Say something. Anyway, I can't hear you, but if you can see my screen, I don't know if can you see my screen? He dropped out. Okay, so I don't know if you can. If you're still in the broadcast, like talk about breaking structures, right? if you're looking at, let me get me a line here. Let me move all this other stuff out the way. Get out of there, fair value gap. Get out of there. I'll leave that one now. Okay, so we got the breaking structure right here. Keep trying to make sure I check to see if you come in. All right. Turn the snap off. See if you come in. Oh, you back. There you go.
Can
All
you hear
right,
me?
you back. Yeah, I hear you now.
Okay.
So you was talking about, can you still see the screen?
Yes.
Okay, so here we go right here. I'm looking at a 15-minute right here, right?
Uh-huh.
So I just put that line right there. I leave it blue, right? I put that line there, right? So we came up, we made this swing high, right? Right there. Then we came down and dropped below the consolidation, running out like the sell side liquidity below this consolidation, right? Then we came back up and broke structure right there, right? We broke structure to the upside. And once we broke structure right there, we left a fair value gap right here at the breaking structure, right in line with the breaking structure. So it's like that would be the fair value gap that I would be targeting to get in on for my trading style, because it's like pretty much right in line with the breaking structure. Now, mind you, now it can be a fair value gap a little bit below the breaking structure. It can be a fair value gap up here above the breaking structure, just depending on how bullish or bearish the market is at that time. But the way I trade it is I try to get the fair value gap that's in the discount of the price leg, right? And if it happens to line up with the breaking structure, that starts to raise the grade of the trade. You know what I'm saying? And what I mean by the grade of the trade is like this fair value gap right here, since there's no other fair value gap, this fair value gap is close enough to equilibrium for me for this price leg right here. Because looking at this price leg right there, right? Because you got the of this price leg, anything below the 50% is the discount. Anything above the 50% is the premium. And so where we had our breaking structure, the breaking structure is pretty much right at the discount. You see what I'm saying? And so this fair value gap will be the one I'll be looking for price to come back down to buy, because that's pretty much the only fair value gap on this breaking structure right here. That's the only one that I will be looking at. It's like a small one like down here, but that's so small in comparison to this one here. This would be the one I would be looking to get in on, because it's pretty much right at the 50%. You know what I'm saying? It's not really in the discount, but it's close enough for government work in this case. So it ain't gonna never be no hard, fast, cut dry rule of which one you look at. You just got to know. I always say know the narrative, know the bias, and then start looking for your setup.
Okay.
Did that help at all?
Mm-hmm. Yeah, because like I said, I understand everything he teach. I think it's just I get thrown off on when to look for the fair value, because I can see when the structure is broken. Um, I can see when the highs and lows are ran and all of that good stuff. It's just actually finding them, the
Okay,
ones
so if
that.
you like you 90% there. If you can see the gaps, if you see when the lows and highs are ran, the only piece of the puzzle you got to like incorporate into it is like understanding like what's the narrative and what's the bias right now. You just and on the time frame you thinking about. Like don't try to give a weekly goal like this 39.50. You know what I'm saying? That might be a weekly goal, right? But you be down here at 38.42, and you looking at fair value gaps to try to get in here with the target of going up there, the market might not be that bullish right now. But in the overall scheme of things, it may be that bullish. But then, okay, if the weekly bullishness is getting to 39.50, right, then we're not gonna be looking at a 15-minute fair value gap at 38.63 with the intentions of going all the way to 39.50. You see what I'm saying? It's like we got to understand what liquidity we just ran and what liquidity the market trying to get to. You see what I'm saying? Like looking at yesterday, for example, right? We fell off the cliff and we came down and we stopped right here at this fair value gap and right next to this low right here. We fell just short of cutting through this low right here, cause that low, if I can get my thing back up here, hit the wrong thing. Okay, that low right there, the low on that candle right there is 38.1950, right? And yesterday the low came down and we stopped right at 38.20, 2 ticks away from getting below this low right here, right? So the market just stopped, froze, consolidated, and started pushing back up. So it didn't want to go down. The market was like, okay, I don't want to go down any lower. The market is showing, hey, I want to come get this liquidity now. It's showing the signs that this is the liquidity I want to push toward, right? It could very well come up here, hit this consolidation and sell back off, but the market is showing I'm not ready to go down to this 37.85 yet. You see what I'm saying? It was dying. It had all the reason to keep dying, but it just stopped before it ran any sell side liquidity outside of what was, you know what I'm saying, under here. You see what I'm saying? Outside of what was under here. It didn't get down. It didn't like blow past like a major consolidation level like this right here. Like this right here, this consolidation here got a whole bunch of liquidity up under it, right? This part of it right here, yeah, it's probably some people who moved they stop up once we blew past this right here and moved they stop up to there. Yeah, some people, but I can tell it's not a lot. And the reason why I can tell it's not a lot is because the way we just blew through that. You see what I'm saying? If it was a lot of liquidity resting up under these this consolidation here, we would have wicked back up off of it. You see what I'm saying? But we just kept dying through it. And then we froze right here. Boom. You see what I'm saying? We froze in the exact same spot we froze before. And we wicked up the exact same amount that we wicked up before. You see what I'm saying? The algo's like, I don't want to go no lower than this right now. I done told y'all. You see what I'm saying? And then we started pushing back up. If we was gonna keep, if the market wanted, if the algos wanted to keep dying, there was no good news to make the algos stop dying yesterday afternoon. It wasn't ever bad news. Apple put out bad news. You know what I'm saying? Gold ain't no good hedge right now. The dollar pulled back a little bit, but the dollar still relatively strong. And when the dollar relatively strong, that's bad for Apple. Apple get a lot of their money from overseas. When the dollar relatively strong, that's bad for semiconductors. Semiconductors get their money from overseas, but the market's still trying to push higher even though the dollar relatively strong. You see what I'm saying? This is all the stuff I be talking about, knowing the narrative. You got to know the narrative because bad news ain't tanking the market right now. And looking at it, it's still trying to push up. It came down to kiss that fair value gap. I think I might have just missed a trade talking, but it's all gravy because I'm patient. But the narrative is like bad news is not tanking the market, right? The banks ain't doing as bad as they not doing as bad as everybody thought. You know what I'm saying? The housing market ain't doing as bad as everybody thought. So it's like, not as bad is good. Good is good right now. Right now, bad is not bad. That, and when it comes, like whenever you hear people saying bad news is not bad news or bad news is good news, good news is bad news, they talking about like when bad news hit and the market go up. That's when they be like bad is not bad. Or when good news hit and the market go down, good news is not good news. But right now, bad news ain't that bad. You know what I'm saying? Good news is good. So it's like the market is telling us, I want to go up, I want to go up, I want to go up. You think about all of this stuff, right? Now that you got all of that in your mind, right? Then you start looking at what liquidity has it run, right? Okay, boom. We came down, we ran a little liquidity right here, but it wasn't a lot because we didn't wick up off of it. So that means all the liquidity is still sitting down, all the major liquidity is still sitting down here, but the market don't want to go get that right now. So then, okay, the market don't want to push down. It's not trying to push down. Now, that's when you start saying, okay, let me see if I'm breaking structure to the upside. If I keep breaking structure to the upside, now I'm gonna start looking for my fair value gap to buy off of that. You know what I'm saying? And then once it gets so extended, the market got to have ebbs and flows. You know what I'm saying? Once you get so extended, if you get up here and the market start failing to hit this 3909, like if the market, get all the way up here, like it made the 3909.50. It failed to get it. It failed to get it. It failed to get it. Then it sold off heavy. You know what I'm saying? Now it's fighting its way back up, right? If the market get all the way up here and start selling back down again, you know what I'm saying, start coming back down this direction again and start breaking through fair value gaps to the downside, that's when you start looking like, okay, now need to start looking for fair value gaps to sell. You see what I'm saying? Because it's like the market trying to get to this buy side liquidity, but it done tried 1, 2, 3 times and then failed. Now it's on its way back up. So now this the time to be looking for fair value gaps to buy up on the breaking structure, because you see I done tried, I failed, I stopped. I don't want the market don't want to go no lower. It ain't really run no real liquidity yet. So this is the liquidity that the market really want. It don't want to go down here yet. It's showing me that. Am I confusing you, or do you understand what I'm saying?
No, and then so the lows to the left a little bit, those are relative equal lows, right?
Over here
Yeah, and then the one to the right too.
and here.
Yeah.
Yes. This right here made relative equal lows with that on the 15-minute level. These like 15-minute relative equal lows.
Okay.
Right? So it's like that's that's a part of the narrative for later when you start coming back down. Like right
To
now,
target, right?
yeah, right now the market saying I want to go up. You see what I'm saying? The market saying I want to go up. So you just follow the market until the market say, okay, I want to go down. Once the market starts saying I want to go down, then these relative equal lows can be in your sights. You see what I'm saying?
Uh-huh.
When the market starts saying I want to go down, then these relative equal lows can be in your sights. Put them in your sights then. But right now, just kind of keep them in the back of your mind. You know what I'm saying? Just kind of keep them in the back of your mind, because they are non-factor right now as of how the market trading today. How the market traded, how the market traded down yesterday and made that relative equal low and then stopped on a dime. Now today the market buying away from that equal low. You see what I'm saying?
Uh-huh.
And so right now, this right here wouldn't even be a factor in your mind, because right now you're looking at, okay, when I get a structure break, is it respecting my fair value gaps? It respected it here, right? Boom. It respected to here. That's the one I just say I just missed that trade. You know what I'm saying? It respected it here, pushed it back up. You see what I'm saying? So now the next one, you see if the next one, if it respect the next one. Will it respect the next one? We don't know. But we got to see how bullish it is. As of right now, you go with the trend. The trend is your friend, right? Push it up there. Boom. Perfect. Came into a discount to a fair value gap. After right around the breaking structure. Boom. Push back up. You see what I'm saying? That was a beautiful entry right there. And it's like, but it all fit with the narrative. You know what I'm saying? That's the narrative. That's the bias. And then you look for the setup. Boom. There it is there. It's like, because you can find fair value gaps all day long, but it don't mean that the market ready to trade back to them. That's why I always try to stress, understand the narrative, understand the bias, then look for the setup.
Okay. Yeah, and he just tweeted and said if you are able, take something off here. So I don't see a low hanging fruit though.
Right here, it's probably I don't know if he looking at the 5 minute.
Oh
I'm looking
yeah,
at the 15
I
minute.
was gonna ask you that too. Do you go down to the lower time frames?
Yeah, I go to the lower time frames too, but looking at the 5 minute, we just went
Yeah,
into
I
that.
see it a little right there. I think.
Yeah, we went and see. We just hit that what's the name? Like here, if you got in right here on the 5 minute chart, if you got in right here, it's the same fair value gap, right? If you got
Mhm.
on the 5 minute chart, you just went past a high right there. That's your low hanging fruit right there. Boom. You just went past that high. Shave. You see what I'm saying? That's your low hanging fruit on the 5 minute because you just broke that high, right? You
Oh, see, I
coming.
always look over here to the left more for the well, back where we coming from yesterday. Yeah, I always look over there for the low hanging fruit.
I mean, that's cool if you don't have any right there next to you. Right? When you start looking left, you want to look, you know what I'm saying? You want to look to the closest spot first. You don't want to ignore these guys and go looking well over here at these guys, right? It ain't nothing wrong with have your target up here. That'd be your trading style. Like if you get in here, right? And you if you get in right here on the 5 minute, right? That's your low hanging fruit right there because that's back to the high that was set. You see what I'm saying? That's back to the high that was set off of that pullback. So that's boom. That's your first stop for shaving. You know what I'm saying? That's your target, if you will, because you're on a 5 minute chart. You know what I'm saying? That's your target. If you only got one contract, boom, that's your target, right? Or you can hold it and wait for a bigger move, but always take the low hanging fruit. You see
Mhm.
what I'm saying? You coming right back into we stopped at this fair value gap right here. Boom. We hit that fair value gap and we started wicking back down, right? It's a swing high right there, right? So now you coming up, you competing with the swing high. It's still a fair value gap that we wicked off of. We coming back into this weekly fair value gap that's there. You see what I'm saying? It's a whole lot of contention right there. So that's your low hanging fruit from the beginning. But if, like you say, if you looking over here, if you saying I'm not gonna shave until I get to this consolidation, that's your trading style. It's all about, you know what I'm saying, what your trading style it is. It ain't no hard, fast rules to none of this. It's just like getting the concept, getting understanding, and then applying it to the way you trade. You feel me?
Mhm.
So it's like, I mean, it sounded to me like you seeing it. It's just like it sounded to me like you just need to practice a little bit on like um understanding what's the narrative and understand where in the market trying to go to, right? Understand, like I was saying before. That's why I spent all that time talking about how we sold down yesterday and then we stopped on a dime. We sold down yesterday, stopped on a dime, and then start pushing back up to show how, you know what I'm saying, once we came below this area, we didn't wick off of that. So it wasn't no real liquidity there. It ain't no real liquidity anywhere in here. That's why the market just fell like that. You see what I'm saying? But when we got to the spot where the algos was like, I don't want to go no lower, we started moving back up. You see what I'm saying? So all the liquidity still sitting down here. These guys still went long down here. They still safe. They still in the game. They still trucking toward their target. You see what I'm saying? And so that's like once you understand that part of it, or once you come to that conclusion, then you watch how did it trade after that. We consolidated all night, right? We consolidated all night, and then we broke to the downside, but we just went up. So all we did was take out the little bit of liquidity that was like to get these guys out of the game. All these overnight guys, we just came down to get them out of the game. You see what I'm saying? And now the market pushing up and it's respecting the structure breaks. It respected this one, it respected that one. You see what I'm saying? Like if you can see like the swing lows and the swing highs, I just say start, you know what I'm saying, practicing on what's the narrative, what the market trying to do, where the market trying to get to, and see, you know what I'm saying, how many times you get it right. You know what I'm saying? Because ain't nobody gonna get it right 100% of the times, but start seeing how many times you get it right by like paper trading it, you know what I'm saying, back testing it, going back and back testing it without even, you know what I'm saying, when I back test, I like to shrink up the chart where I can't see nothing, You know what I'm saying? Shrink it all the way down where I can't. Get back over there. I like to shrink it all the way down where I can't see nothing on the candles, right? And then go back to the date that I want to go back to, and then blow the candles back up and start trading. So I can't have no kind of, you know what I'm saying, bias to it because I don't know what happened that day.
Okay.
So besides just looking at the breaking structures, what other questions you got?
Um, really, so far that was it. Cause like I said, I'm really just trying to learn this ICT to like you said, to start using it. Well, I've been practicing for about the last month and a half, maybe,
Mm-hmm.
and I could see it on the charts. It's just putting it to use.
When you say practicing, have you been taking you been back testing or taking paper trades during the day? How you been practicing?
Really just paper trading it. Yeah,
Actually going in and doing the trades?
yeah, but that's what I'm saying. Sometimes I'll be looking at it and I look at it and I think sometimes I get the the that's what I'm saying. When you flip, when it's break structure, it has to go back and run a swing high, right, or a swing low. Once it does that, that's why I asked you at first. Are you supposed to? Is the fair value gap created after it's run the highs and lows? Because it.
And see what make it a fair value gap is because you expecting the market to come back to that and to service those people as skip. So that's when it come into I open up the wrong picture. But are you when you do your test, are you like journaling like on paper or like doing screenshots and doing anything like this right here?
That no, I'm not.
Are you doing it on paper? Are you writing it out on paper?
No, I literally just go in and place my trade and think it's from paper mode, and if it work, it work, and then
Okay. My advice is to
so do
start
some
doing something like
journaling.
this right here. Like start journaling something like it's easy for me to journal like this where I take a screenshot and then I just mark everything up. You know what I'm saying on the screenshot, or if you know what I'm saying if you don't want to go through the trouble of doing the screenshots, or I ain't got like no kind of software that'll let you do this easy, at least journal it out. And I like doing it on screenshots so I can actually see the counters of what I was doing. You know what I'm saying? But let me see this right here. Just pick one. Okay, like this right here. And then sometimes I try to catch it while I'm in the trade. Like if I'm thinking about it, I'll try to catch it while I'm in the trade. You know what I'm saying? When I'm in the trade, I'll try to take it and be marking down why I took the trade or what I did or whatever, whatever. But start journaling your trades so you can see why you took it, what was your mind frame at that time? Why did I take this trade? What did I do? So when you go back and look at it, you can see, okay, I thought this, but the market did that, right? And then you can start trying to figure out why did the market go against you? Did you have the bias wrong? Did you not understand the narrative of the market at the time? You know what I'm saying? Did you chase it? Did you chase it? Did you know what I'm saying? Did you miss it, but you still tried to get in? You can go back and start to figure that stuff out if you journal it. But if you don't journal it, right, you trying to think back to why you did it. I can't do it. You know what I'm saying? You might be a young man with a young mind, but I can't think back and remember what I did 5 trades ago. I got to go back and you know what I'm saying, open up my little journal pictures and be like, oh, okay, that's why I did that. Oh, okay, that's why I did that. You see what I'm saying?
Hmm.
Like go in and just, go in and look at the things and be like, okay, I had this, I had that. But that'll help you to start to figure out like the start to see it better. To start to see it better. It'll help it one, see it better, and two, start to cement it, you know what I'm saying? Cement it into your mind.
Okay. Yeah, I'm gonna start doing that because I can take the screenshot for sure.
Yeah. Cause without journaling, I'm telling you like this right here. Without journaling, you 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 already fighting an uphill battle because it's like we trading against our own emotions. You know what I'm saying? That's the biggest hurdle we got to get over is like trading against our own emotions. So it's an uphill battle. And then if you're not journaling, you put yourself at a disadvantage because like now you ain't got nothing. You ain't. It's like playing football without watching the tape. You know what I'm saying? Without going, you going in there trying to play football without watching your tape, without watching your opponent's tape. You don't know what you doing wrong. You don't know what they doing wrong or right. You don't know what their weakness is. You don't know what your own weakness is because you can't go back and verify it. You see what I'm saying? I can look at these charts all day and I can make the chart say exactly what I wanted to say, but that don't mean that's what the chart want to say. You see what I'm saying?
Mm-hmm.
Yup. What else you got for me?
It's nothing at the moment. I appreciate it.
Oh man, ain't nothing, man. I ain't got nothing to do but go. Probably I ate all my cereal. I'm probably eat some leftover Popeyes. I ain't got nothing to do, but I appreciate you for pulling up, man. I be telling people just pull up and ask me, man. If I got an answer, I get an answer. You know what I'm saying? You ain't gotta pay me for a one-on-one when I'm up here on live every day and I put the link in the chat. Be like, pull up and ask. I don't know everything. Then you got cousins. Cousins will put stuff in the chat too. What they talk about? Sale model look like a sale model to me. Oh, they talk about look like it's setting up for sale model.
Yeah,
ICT
and that's
call.
I'm looking at it right now on the 5 minute, and that's what I'm looking at. Like if we come back and break the swing low, if so, if we break this swing low, it would have to track. But so it would have to make a fair value gap. Are you on the 5 minute?
Yeah, I just went to the 5 minute.
So you see this one that it just created, that one.
Here,
Yeah, if we break that one, that's a breaking structure, correct? Because we creating higher lows.
I mean, it could.
Or am I
It
forcing
just
it
depends.
on this
Nah,
smaller
it's like
time frame?
it's like you gotta think about what because since this is like a lower time frame, you got to understand the higher time frame too. You see what I'm saying? It like that's why
Yeah.
I say it depend on what you're trying to do. Like when you on these lower time frames, you got to be real careful because it's like it's gonna be a lot of swing highs and swing lows, right?
Mm-hmm.
So right here I got a 15-minute fair value gap marked out. You see what I'm saying? So we came and kissed this fair value gap and we kept pushing up, right? Now the market done been open for like going on an hour now. It's gonna start settling down, it's gonna start getting into its groove, right? Now you gotta think about it on the 15-minute time frame. Boom, on the 15-minute time frame, we
That's
really
the
ain't even come back and try to fill this gap yet. You see what I'm
okay.
saying? So we can realistically come back down, fill this gap, and still take off. You see what I'm saying? Because we put on the 15-minute, all we did was come up to this fair value gap right here on the 15-minute, and we didn't fill it. Right? We
And on
came
the
up to
15 minute, the swing low is down lower still.
see.
That's why I said, am I forcing it, trying to go to that smaller time frame? Because you see, the 15 minute, the swing low is right where that fair value gap is, right?
Okay, this is what I use as a rule of thumb when I'm going to the lower time frames, right? If I'm going to the lower time frames, I'm not gonna try to go counter trend until the higher time frame tell me it's time to go counter trend. You see what I'm saying? Like you can drop to the lower time frame and get lucky by going counter trend, but that's just gambling. You see what I'm saying? Like if we come down, if we come down on this 15-minute, right, and get a closure below this swing low right here, right, then the market is giving you some more clues to go ahead and push down. But if we come down on the 15-minute and just fill this fair value gap and push back up, the market just coming back down to take care of this gap work to go back up. You see what I'm saying? But on that lower time frame, when we start trying to build our bias from the lower time frames, that's when we start messing ourselves up. You see what I'm saying? Get
Mm-hmm.
your Get your bias, like, you know what I'm saying? That's why I like to start at the 60-minute and start marking stuff out, right? Start marking stuff out, cause I got a 60-minute fair value gap right there. Let me unlock this right here. Boom. Come up here. Oh, I ain't got my lock on. Hold on. Let me put my lock back on real quick. So I got a 60-minute fair value gap right there that we made. Ah, come on, Tim. Right. Okay, boom. So now on this price leg right here, right? I got, this is the 15-minute fair value gap that we was looking at, right? So we came down to the 60-minute fair value gap right here that I already deleted it off. We came to the 60-minute fair value gap, came very close to the 60-minute breaking structure, right? Now, mind you, now we had a 60-minute fair value gap over here that I had marked out, right? So you got to think about it. You got to think about all this stuff while you trading like in real time, right? So, Pete, what we did, right? We had a 60-minute fair value gap right here that we made going down. And I keep moving my box in my OCD ain't gonna let me let it stay like that. Right? We made a 60-minute fair value gap on the way going down yesterday, right? And
Mm-hmm.
then so what we did earlier this morning, we got a gap fill, right? We made a gap fill, right? And then when we opened up at 9 o'clock, right, coming down, at the 9 o'clock candle, I said 9 o'clock, but at the 9 o'clock candle, we came down like we was fun to do a gap fill retracement. You see what I'm saying? All we did was retrace back to that same fair value gap, and then we pushed up off of it. You see what I'm saying? It's like you gotta be aware of all the stuff too, cause a lot of times you're gonna get the gap fill retracement. Shout out, I got the gap fill retracement from Jay the Trader. And then ICT, he was talking about, you know what I'm saying, when you go through it, you just repricing, and then when you come back through it the other way, you balancing it. You know what I'm saying? Repricing and balancing. That's what he called it. And Jay the Trader called it gap fill and retracement. You see what I'm saying? So all we did, we came back down. We was getting the retracement on this fair value gap that we filled earlier that day, and then we wicked back up off of it. Now on the 60-minute time frame, we got a fair value gap in a breaking structure right here that we haven't traded back down to. You see what I'm saying? So we haven't traded back down to this 60-minute breaking structure right here. Will we trade back down to it? Maybe. Will we not? You know what I'm saying? But I like to build all of my gaps and my breaks and structures on the higher time frame, and then when I'm going to the lower time frame, like when I get down to the 5-minute, you see what I'm saying, when I get down to the 5-minute, now I see key higher time frame spots. I got a 60-minute fair value gap that we retraced to and bounced off of, right? I got a this is a 60-minute fair value gap that we made on the way up. You see what I'm saying? We made this on the way up, but we still ain't, you see what I'm saying? Like, it's based off of, but if I come down here and be like, okay, if I break this structure right here, then we going down. Maybe not, because we may just be coming down to fill this 60-minute fair value gap, because we gonna break that structure on the 5-minute. You see what I'm saying?
Mm-hmm.
So it's like, zoom out a little bit and then look for your swing. I like to look for my swings on the higher time frame. I know everybody like to try to trade the lower time frames because it's sexy, because it move fast. You can jump in the chat like 100, like, hey, I'm done for the day. Like Draco, hey, I'm done for the day. I'm gone. I got my 5 points with 10 contracts. You know what I'm saying? It's sexy, but that ain't me. That I'm old and I'm patient. I look for my swing lows and swing highs on the hourly and on the 15-minute, and then once I start approaching them, like when I start approaching these boxes like this, then I drop down to a 5-minute, then I'll drop down to a 1-minute to see if I can get a better entry inside these 60-minute fair value gaps.
Okay.
Did I help you or did I confuse you?
No, no, that's good. Like I said, I need to go back to the higher time frames first.
Yeah, that's what I would do. Unless you just trying to scalp real quick.
Yeah.
If you're looking for bigger moves, like the higher time frames gonna give you the setup for the bigger moves. Cause this is what I do. I look for the setup for the bigger moves, but I look for the entry with the better risk to reward. You know what I'm saying? Cause if I try to take the entry based off of the 60-minute swings, you see what I'm saying? I may have to risk 30 points. But if I got my target mapped out on the 60-minute and I drop all the way down and make an entry off of a 1 minute, you know what I'm saying? Come in and make an entry off of a 1 minute, then I may only have to risk 7 points. You see what I'm saying? As opposed to risking 20, but I'm making it off the 1 minute, but it's based off of a spot that I marked out on 60 minutes. So I know this is a 60-minute level. I'm just dropping down to this 1 minute. I'm using this 1 minute fair value gap right here, right? I'm using this 1 minute fair value gap right here, setting my stop loss below this right here, and then trying to take it back up based off of this 60-minute fair value gap that I had already set. You know what I'm saying? Just trying to get a better risk to reward on the lower time frame.
Okay.
Got
Okay. Yeah.
anything
So
else?
no, that's it so far. I'm go back. I'm definitely start taking my pictures.
Yeah, take them screenshots and mark them up, man. Without journaling it, you putting yourself at a disadvantage. You know what I'm saying? Without journaling your trades, you're putting yourself at a disadvantage.
Okay. Thank you for your time.
Oh man, ain't nothing, man. Hey man, this what it's all about right here. It's all about helping each other. Um, y'all see I missed the FI trade right there. That could have been a FI SPX trade right there, but it's about is this right. I do this right here to help the cousins. You know what I'm saying? I don't day trade every day. So I'm not mad that I missed that entry because I'm not a day trader. You know what I'm saying? I'm primarily a swing trader. Do I day trade? Yes, I do day trade. You know what I'm saying? Make a few dollars here, make a few dollars there from day trading, but I'm primarily a swing trader. So you know what I'm saying? I don't care that I missed that trade right there. You know what I'm saying? It's not about me missing that trade. It's more important that, you know what I'm saying, I help this young brother try to, you know what I'm saying, figure out the mental part of this trading, because he can see the setups. You know what I'm saying? He just got a block. He just got a mental block where, you know what I'm saying, which ones do I pick? Which ones do I, you know what I'm saying? It's about understand. It's like he got to, work on the narrative part of it. That's what it's about, man. If y'all got anything out of this, man, I'm sorry, y'all. I ain't been looking at the I ain't been even been looking at the what here to learn and shall say Popeyes this early. Hey, look here, man. Look here. You been hanging out with Kev too long, man. I ain't Michael said the call's printing. That's what's up. Y'all clap it up for Michael, man. He said the call's printing. I ain't been looking at the which app do you use for journaling? I use Photoshop. That's what I use because I got the Adobe suite. So I use Photoshop. ICT caught that tweet at the top of the hour. 1 hour fair value gap. Okay then. Fair value gap is low hanging fruit. 3,900 looks good. 3,900 looking real good. We at 38.95 right now. Dollar is the new VIX. What's up, Lil Hulk? I ain't know you was up in here. Yep, that's what it's up. 100, no cap. Just keep studying. That's all it is, man. It's all about just keep studying, keep doing it, trusting the process. You know what I'm saying? Once you learn to trust the process, man, it become easier to click that button. And the most important thing, DeAndre, if you still on the most important thing, man, is risk management. Do not let your losers run, man. Do not let your losers run. Don't feel like, oh, I got to be right. We get it wrong, man. I done lost so much money trying to be like, hey, man, I know I'm right. Hey, I know it's gonna turn around. Man, cut your losers quick and then get back in. You know what I'm saying? Cut your losers, because when you ain't got no trades on, you can look at the market, you know what I'm saying, objectively. Oh, ES pushing. Look at that. The ES pushing right now. You know what I'm saying? 39.09.50 looking real good. Look like they coming for that. It's pushing. These hourly candles right here. We totally disrespect this hourly fair value gap right here. We done blew through that. Look at that. Blew through it. We still got 30 minutes on this hourly candle, but it's like we blew through that thing with some aggression. You know what I'm saying? I don't know why I put this. Might have been like something on the lower time frame when I was talking to DeAndre. I'm move that out the way because that's getting on my nerve right now. What Quantity put on? Quantity just put something on YouTube. Shout out Quantity. What Quantity put on YouTube? Hey, I appreciate y'all for hanging out with me. I appreciate DeAndre for pulling up. Like I tell y'all, man, I got the link in my bio for one-on-ones, but man, I can't. I done taught everything I need to know how to teach, man. It's just all we can do on the one-on-one is have an honest conversation. You know what I'm saying? Shout out DeAndre for pulling up on Al Gore's internet. You know, it's probably another cousin that had that same question that he had, or some of them same questions. Now, other cousins who come back in and stick around this long on this video gonna get the same one-on-one that DeAndre just got. You feel what I'm saying? So, man, when I put the link in the chat and say pull up, man. Pull up. I ain't got nothing to do right now. I'm gonna be sitting here at the computer anyway. What's your thoughts entering SPY leaps at these levels, or do you think it may fall? Oh, 2K crypto. You know what time it is, 2K crypto. I got it on deck. I ain't got to go look for it today. And then I have updated it with Meta and NASDAQ. I done updated it. Oh, crystal ball. Will we fall further down, crystal ball? Hey, 2K crypto, man. I just trade what I see. When it comes to buying leaps, you gotta have levels. When it comes to buying leaps, right? I'm in some 2024 leaps right now that's getting busted in the head, right? And I'm cool with them getting busted in the head because when I bought in, it was at a level that I said, if we come here, I'm gonna get in some 2024s, right? So when they start getting busted in the head, right? This is what I chose to do. Instead of getting out of it, right? I just started playing defense and I started cashing in on shorter term puts and shorter term calls to offset what was the drawdown I was taking on the 2024s. So right now, my 2024s can go all the way down to 75% negative, and I would still break even on those trades. If I cash my 2024s out at 75% down, I would break even on that trade because I chose to play defense on it instead of closing it. That was my choice to do it like that, right? Because I bought the time. If I'm gonna buy the time, I'm gonna let the trade play out, right? But what I don't do is I don't dump all my money into the leaps and don't have no money to play defense and don't have no money to play shorter term. So when it comes to buying leaps, right? Looking at what we trading at right now. I don't know if you was on the live earlier, but I said if we get a closure above if we get a closure above 393.16 on the spot, right? Just say this week we bust up and we reclaim the 50 period this week. Get back to this gap down right here. Get a closure up there. Any pullback any pullback after we get that closure above that, once we come back down, just say if we leave a, let me draw an arrow. Come in arrow. Right? Just say, let me turn this snap off. Just say this week we come up, boom, and we just say we get a closure right there, right? And just say we leave a fair value gap right there. I'm gonna draw a little rectangle here. Just say we leave a fair value gap right here, right? Boom. We leave a fair value. Nope. Let's put the fair value gap right there at this breaking structure, right? So boom, we gonna put the fair value gap right there, and just say we come up here and stop at the top of this gap down, right? If we get a pullback, down to this right here, that will be a viable pullback for me, because we got a closure above this right here. The market saying I'm ready to go up, and then we getting us up. That's gonna boom give us a higher high, a higher low. That'll give us two higher lows. So that'll be 1, 2 higher lows. That'll be 1, 2 higher highs. So that's 2 higher highs and 2 higher lows from the low that we made, right? A weekly breaking structure right there, and then a retracement back to a fair value gap / breaking structure. You know what I'm saying? So that would be a viable pullback to me. Let's just say we came from here and we went up to there. Boom. Here go the discount right here. So coming back to right there, boom. We come back down into the discount right there at this. Look like a teeny weeny fair value gap there. I don't know. But boom. That's a viable pullback. Buy me some 2024s or something like that. That's the way I look at buying leaps. I don't worry about like if we gonna go down, if we gonna go up, am I gonna miss the run? I don't look at it like that. I watch the price action. I decide ahead of time when do I want to get in. So now I'm thinking about when I want to get in now before we make the move. I'm already thinking if I come up here, boom, and break through this right here, I ain't gonna hold you. I'm looking at this right here. This is what I'm looking at here. When we made this high right here, right? We came down, we made this low, we made this high, we made this lower low. If we come up here and make a higher high, I'm gonna be looking at this right here. Come here. I'll be looking at this right here as, why isn't this not drawing? What in the haberdashery? There you go. I'll be looking at that right there as a breaker. That candle right there. I'll be looking at that candle right there as a breaker. I already peeped that out. We made this high. We made that low. We made a high. We made a lower low. When we break this structure and make a higher high, I'm going to be looking at that candle right there as a breaker. So anything, once we pass this, if we get a pullback, especially if we pull back into this breaker, you know what I'm saying? That's going to be a viable pullback to me. That's how I look at it. I don't worry about if we going down, if we going up. I just, you know, so I look at the price action and I set my targets for when I want to buy, and then I pull the trigger when it get to that place. If it start going against me, I just start playing defense or I get out of it. If I bought it 2 years out, I let it play out and I just play defense. I still got IG going, man. I'm about to hang up on IG. I just play defense on it. If I bought it 2 years out, if I bought it 3 months out or 6 months out and it started going against me, I'm getting out of there. I'm getting out of there. Buy call it time. I'm fine with the risk down here. Let Spalene Price do the talking. Yep. I appreciate you too, Perry. Do you swing trade futures? I'm probably going. I've been talking about getting into swing trading futures, but I ain't swing trading not right now, not in this market. I'm gonna start, and when I do swing trade the futures, I'm gonna be swing trading MES. But I'm waiting for the market to get back into a trending market before I try to swing trade. We just been chopping. We've been chopping for like a couple months now. I appreciate you here to learn and share. I appreciate you, Sanjay. Great session this morning. I'm going to replay the convo you had with the young man. I appreciate you for tapping in, Law. Took a L today. We all take a L. Just go back and journal it and look at why you took the L. You know what I'm saying? Did you break a rule, or if the trade just went against you? If the trade just went against you, look for the lesson in it. If you break a rule, you know what I'm saying, hold yourself accountable. We all take L's. That's the reason I day trade. Get in and out, have a clear mind the next day. I feel you, Gabriel. There you go, Kashaya. Look at Kashaya in there with the support. Shout out Kashaya, man. Shout out Kashaya, our Canadian cousin. Bob's your uncle. Yep, y'all knew the crystal ball was coming. Y'all knew the crystal ball was coming. You said with the NASDAQ being spelled right, the crystal ball just don't hit the same. I added Meta. I put Meta in the crystal ball because it used to say Facebook. I changed it to Meta. It's so much funnier when it's spelled wrong. Spider Game wants to revert to previous spelling. I might have to put it back. I'm about to put it. The Spider Game said I got to put it back. I got to put it back. I'll put it back to Facebook, and I'm gonna put it back to NASDAQ with a Z. I will put it to Facebook, and I'll put it back to NASDAQ with a Z. I changed Meta, so I just changed the NASDAQ, but I'm gonna put it back. Man, this thing running slow. Asking it to process too much at the same time. I'm asking my computer to do too much at the same time, y'all. I think my computer just blew up. Oh, there it is. I think it just blew up. Put Meta back to Facebook. I'm put Meta back to Facebook. I'm put NASDAQ back with a Z. NASDAQ. Put it back with the Z. And I'll make NASDAQ bigger. I'll make NASDAQ bigger. So you can see it good. Make NASDAQ bigger so you can see it good. Oh, wildin'. Hey, man, I'm about to get off and resave it. Let me resave the crystal ball. I'm about to get off, man. Once I resave the crystal ball, I'm going to get off. I appreciate y'all for hanging out with me. Hopefully I was able to help not only DeAndre, but I was able to help somebody, man. That's what I do this for. I just do this to share the little bit that I know. Man, y'all hit the like button, man. Y'all hit the like button before we get out of here. Let me refresh and see if the lights go up. 38. Y'all hit the like button before y'all get out of here, man. I'm about to get out of here. And I see y'all tonight at what's this, Tuesday? I see y'all tonight for price action recap, man. I'm just fun to chill. I missed my trade for the day. I missed my trade for the day, but I'm gonna go ahead and trade. I chalk this up as a win because I feel like I was able to help clarify some stuff for a cousin. So I chalk this day up as a win, man. I chalk it up as a win. DeAndre, hopefully I clarify something. Everybody else who listened in on the one-on-one, I hope I clarify something for y'all to help, you know what I'm saying, help somebody see it in a different light. But y'all know what it is, man. I appreciate y'all for hanging out with me. Appreciate y'all for spending time with the old man. I see y'all tonight at 6:30 p.m. Eastern Standard Time. Gone.